Hello, everyone, and welcome to the program Business Incorporated, live from Channels Television International, headquarters in Lagos, Nigeria. I am Bosin Amafaye. Thank you very much for sparing time to be with us on the program. Let's get the show started. The International Energy Agency warns that oil prices could fall again if Iran's output increased as part of the broader surge in OPEC's output. Meanwhile, prices of global agricultural commodities head in different directions due to issues ranging from adverse weather conditions in Ivory Coast and Nigeria to the price of the dollar. Plus, General Motors temporarily suspends its operations in Egypt, North Africa, due to the country's currency crisis. Now let's get started with the latest news. A bearish news from the International Energy Agency warning Tuesday that oil prices could fall again if Iran output increased as part of the broader surge in OPEC's output. Iran's crude oil has increased some 80,000 barrels per day in January to 2.22 million barrels a day after sanctions were lifted and members of OPEC failed to agree on output cuts among members. The IEA says in its monthly oil market report that it is very hard to see how oil prices can rise significantly in the short term. Saudi Arabia has also increased production by 70,000 barrels a day to 10.21 million barrels, while Iraq has set a new output record of 4.35 million barrels a day. The Global Energy Watch Agency sees a buildup of 2 million barrels of oil per day in the first quarter of 2016, followed by 1.5 million barrels per day in the second quarter. And that's news just coming in. Markets get very, very bullish on that news despite the bearish sentiment from the IEA. The Brent crude was trading higher, $33.20 a barrel. A few minutes ago, NYMEX, that's the U.S. sweet crude, $30.09. That's the news as we have it. Now let's get to the world of agricultural commodities, where prices are heading in different directions due to a number of issues, from adverse weather conditions in West Africa, drought in top sugarcane producing regions, as well as a ban on wheat imports by North Africa's largest economy, Egypt. Cocoa futures price was up 3.57% at $2,870 per metric ton on Monday as extreme hot and dry weather impact world's top cocoa producer, Ivory Coast. Corn prices also declined 0.88% at $3.65 per bushel on stronger U.S. dollar in recent months as sugar prices head north 4.34%. At the wheat market, the Egyptian authorities spoke the subsector as a clampdown on imports, dragging prices down 3.01% to $4.59 per bushel early today. Now let's get about stocks now. Tokyo market fell sharply in today's trading, the second day of the week, following tumbling markets across Europe and the U.S. on Monday. The Nikkei 225 closed down 5.4% at 16,085. It was the worst one-day fall for the Japanese market since the middle of 2013. In Tokyo, the banks were the biggest decliners, with the Mitsubishi UFJ dropping 8.3%, Sumitomo Mitsui down 8.7%, and Mizuho Financial Group down almost 6%. The strengthening yen also hit big exporters, with the currency up almost 1% against the dollar. Toyota, with the world's leading automaker, down 6%. Honda lost 6.4%, and Nissan fell 6.8%. The Nikkei 225 was the worst. It's down more than 20% from its peak levels that was reached last June. There was little trading elsewhere in Asia. China mainland's market short all this week for the Lunar New Year celebrations. Hong Kong and South Korea are both closed for the third day in a row. So let's see how Europe is trading right now. Quite a very nasty Monday. So let's see how Tuesday is shaping up with a number of stories around the markets and elsewhere. Let's bring in Olaf Krieger, who is a financial correspondent for DWTV, for Channels Television, live at the Frankfurt Stock Exchange. Olaf, thank you very much. Let's start with a tragic train crash that occurred early today around Bavaria, Munich in Germany. Bring us up to speed on this incident that leaves some people dead. What is being done as we speak? And is it a development that the market is talking about?
Yeah. Yes, everyone here was really shocked. Down on the trading floor as well, here up on the gallery. As far as we know, at least 9 people have been killed in this train crash in southern Germany on Tuesday, and 150 people were injured, including 50 seriously. So, and local broadcaster reporter reports that rescue workers are still there, climbing on this crash train, on the wreckage, and trying to get people out, and the traffic on this road is already closed. So this was really a scary moment for all of us.
Yes, sympathies around the world, commiserations around the world flowing into Germany as we speak on this very tragic Tuesday with that train accident there. Now, but let's get into the markets a little bit. I'm sure this will have some impact on traders who are sitting on the trading floor there with you at the German DAX, thinking about their families and friends and those who are involved, and of course the transportation rail system in Germany. But let's talk about the market. A second day, still negative trading hanging around the market. The last time I checked a few minutes ago, the German DAX is about 1% in the red. The rest of the Europe trading around similar margin. Is there a silver lining in the market for us, Olaf?
No, unfortunately not. We are still very bearish here in Frankfurt, not even in Frankfurt, in Paris, in London, and anywhere else. The same picture. The shares are going down, are going to the south, and here in Frankfurt we are heavily in the negative territory right now because the markets are suffering the same concerns than all the days before. It's China. It's the economic outlook for the U.S. and, of course, the oil price. There obviously is no bottom line for the oil price, and the oil price needs this bottom line to rebound somehow. But until now, there are no hints that this situation and this atmosphere will dramatically change in the couple of next days.
Yeah, not a very interesting, bearish statement from the International Energy Agency today about saying that crude oil demand globally will just be around 1.2% for 2016. The strategic reserves are part of the, or storage are part of the concerns there, the oil price demand, oversupply. Now, look at the German industrial and export figures for December 2015. Not quite interesting a figure there. How much does the oil crude reality have to play with the German industrial machine?
Well, the situation is pretty good even for German exports. They increased quite a lot, and but those figures were highly anticipated because German products all over the world still have an excellent reputation. German machinery, German carburetors all over the world are pretty much successful until now, and what I think is it's also good news, especially in the current crisis we see right now, something like balsa.
Okay, Olaf, let's leave it there, and we'll check with you folks tomorrow in Frankfurt how things are shaping up in southern Germany about those that train accident, and we'll follow up on other stories as the market as well. Let's hope things get better and the casualties figure not rising below the current levels. Thank you very much, Olaf, Krieger, and the rest of the team, GWTV for Channels Television at the Frankfurt Stock Exchange. Let's talk about the UK. The Institute for Fiscal Studies says Mr. Osborne's pledge to run a budget surplus in normal times from 2019 to 2020 was simple, but will require a precarious balancing act. According to the IFS, the result could be big tax rises or spending cuts with very little notice. The next budget is on the 16th of March. The IFS publishes its annual Green Budget document ahead of the actual budget every year, highlighting economic conditions and the challenges facing the Chancellor. When we come back, we'll talk about Nigeria's telecommunications sector in 2015. We'll also take a look at some reports from Nigeria, from the Voice of America. We'll get a look about Nigeria's economy. We'll talk about the budget and, of course, our own shuttle diplomacy.